So why did you opt for crowdfunding as a technique to raise capital?
Because we loved the idea of a democratic offer, an offer that was the same for everyone. And we've continued this way. So we love the idea.
Okay.
Whether you had 50 quid or 500 quid or 2 grand or 50, you could get the same offer.
Yeah.
And when we opened our second shop, we did a much bigger crowdfund. We crowdfunded £450,000 through Triodos Bank, and we crowdfunded a loan. So we pay back people. We'll pay back this loan in a few years' time. But whether you had 50 quid to put in or 10 grand or 50 grand, because we had a couple of people put in 50 grand, you get the same deal.
Yeah.
And so we love the idea of being propelled by a big group of people all sharing the risk rather than one big lender, rather than a big bank giving us the money.
Yeah.
It's all about lots of people having a piece of it and lots of people having access to the same offer. So it's important when you run an ethical business or you set it up that way, it's important whoever gives you money has a say. And so you're choosing who you're going to be kind of in hoc to, if you like. So we choose our lenders carefully. We choose people who care about social value, or we take it to a crowd who all put in a bit of money.
Okay, makes sense. I guess, was there a part of you which didn't actually want an investor on board? Because with investors, as we already discussed, you get these short-term pressures, and I think it's changing now, but traditionally investors don't really align with social values. They're all just short-term profits now.
Yeah, exactly. I mean, the big VCs and banks are like that. They won't, if you owe them money, you owe them money, and they want their money, and that's it. But we have found social investors, even at the beginning, we found people who, yes, they were putting money in, but they were equally interested in the social value we were creating. And, we've continued to this day to not, we've always found those people who, instead of expecting 8, 9, 10% return, they're happy with 3, 4, 5. And you deliver social value. And in times where we've had tough times and money's been tight, we've been able to go back and talk to these people and go, look, can we postpone our repayment to you for a year or 6 months? And they've always been accommodating because they can see that we're delivering the social value. So if you choose your investors carefully, and who you want, how you bring money into the business is important.
Of course.